Copper prices increased nearly 40% in the last 1 year, and this copper-related ETF is up over 150% during the same time. While everyone is busy with gold and silver these days, even with the recent pullback in prices, copper seems to be silently making its moves. Based on recent reports published on copper's future outlook, Wall Street seems to be extremely bullish. It is being estimated that the demand for copper is going to be booming due to reasons like the rapid AI infrastructure buildout, while the supply of copper is going to be constrained. If these estimates do come true, then I think the price of copper could be going much higher. So in this video, I'll talk about 3 copper-related ETFs that will benefit if copper prices explode. I selected these ETFs based on factors like the assets these ETFs give exposure to, associated fees, tracking quality, dividend yield, and the fund size of the ETF. But before we begin, a quick disclaimer that this video is not financial advice. It is simply my personal opinion based on the data I have looked at and my understanding of that data. Okay, so the first ETF on this list is COPX, which is the Global X Copper Miners ETF. This ETF trades on NYSE Arca and it has gone up by over 120% in the last 1 year. It gives exposure to global copper mining companies, which includes both large cap and mid cap producers. The geographical location of the mining companies in this ETF includes Canada, China, US, Australia, and others. The total expense ratio for this ETF, which indicates the fees the holders of this ETF end up paying, is currently at 0.65%. When compared to the other ETFs on this list, this is the lowest, which is a good thing. The tracking quality for the ETF, which indicates how well the ETF tracks the price action of the underlying assets, which by the way I find many people do not talk about, but is quite important, is pretty good, looking at the past 1 year data. The assets under management, or often called AUM, was close to $4.7 billion for this ETF at the end of 2025. The higher the AUM, the higher the liquidity of the ETF typically, which is a good thing. This ETF is one of the most liquid copper miners ETF globally. COPX also pays a dividend, which for the year 2025 was about 2.67%. So that's another plus. But dividend can fluctuate from time to time. Full disclosure, I do have a small portion of my personal portfolio currently allocated to this ETF. The second ETF on this list is COPJ, which is the Sprott Junior Copper Miners ETF. This ETF trades on the Nasdaq and is up over 150% in the last 1 year. It gives exposure to mainly small cap copper miners and copper mining related businesses. Usually, small cap stocks are more volatile both to the upside and to the downside when compared to mid cap and large cap stocks. So if copper prices go significantly higher in the future, this ETF could outperform the previous ETF we looked at on this list. But the same will be true to the downside, meaning if copper prices were to crash, I think this ETF can be a bigger loser when compared to the previous ETF. So basically, high risk and high reward. The geographical location of the mining companies in this ETF includes mainly Canada, Australia, United States, countries in South America, Europe, and more. The total expense ratio is currently at 0.76%, which is slightly higher than COPX, and tracking quality is very good looking at the last 1 year data. Fund size, or AUM, is much smaller compared to COPX at about $179 million at the time of making this video, but still good enough for liquidity in my opinion. And finally, this ETF paid a dividend yield of about 11.6% in 2025, which is much higher than COPX. But dividend can fluctuate from time to time, as I said already. The third and final ETF on this list is COPP, which is the Global X Copper Producers Index ETF. This ETF trades in Canada on the Toronto Stock Exchange and is up over 90% in the last 1 year. It is not to be confused with a different ETF with the same ticker symbol that trades on the Nasdaq, which is the Sprott Copper Miners ETF. Also different from COPJ that we looked at second on this list, which is the Sprott Junior Copper Miners ETF. The specialty of this ETF, COPP, is that it focuses mainly on North American listed copper producers, unlike the other two on the list, which give a more global exposure. The total expense ratio for this ETF appears to be currently at 0.96% if you basically add their management expense ratio and trading expense ratio, so the highest on this list. Tracking quality is not at the same level as COPX and COPJ, but is pretty decent, I would say, looking at the last 1 year data. Fund size appears to be only about 139 million Canadian dollars at the time of making this video, which is the smallest on this list, but I think it shouldn't really be a big issue when it comes to liquidity. Finally, this ETF did pay a dividend recently, but it seems to be quite small when compared to the other two ETFs. While in comparison, this ETF might not seem very attractive, for someone who is looking to buy an ETF that trades in Canada, I think this provides a good choice. So there you go. These are the three ETFs that I like, which I think will benefit in a big way if copper prices were to go up massively due to increased demand and supply constraints. But remember, as always, this is not financial advice, and I'm not a financial advisor. There is always risk when buying and selling assets like stocks, ETFs, or crypto, so please do your own due diligence and research before making investment decisions. Knowledge is key to navigate the ever-changing economy and building wealth. If you want to get more such informational videos and grow your knowledge, you should subscribe.